In this video, I'm going to talk about how to play a gap up fade. Let's get into it right now. A gap up fade is when a stock gaps up and you're looking to play it bearish, and then potentially maybe later in the afternoon, you're going to look to play it bullish. What I'm going to do is walk you through the signals that I personally look at if I'm going to be shorting a gap up fade. The one that we're going to review today is Alibaba. Baba has had really nice edge, in my personal opinion, since this day here on the 3rd of January, but most specifically the 4th of January. The reason I say it's had good edge is because you'll notice it was consolidating really tightly, building some beautiful compression here for about a month, and then you had a little bit of a gap up. Everything really broke out amazingly on this day. One of the best gaps I've ever seen in my entire life. In fact, let's just go analyze this for a second, because this is this is beautiful, just gorgeous in every way. Look at how long Alibaba traded sideways on that particular trade. Your very first candle was a big sell-off, and then it just rested and built again, really beautiful tight trading range. There's your bear candles closing above the 10, entry here, stop down there, and boom, just tons of profit on a fantastic gap on the 3rd of January. But talking about present day, one of the things I look for if I'm going to do a fade is absolutely without question the pre-market. Pre-market is big for me, and for me to determine a fade, what I'm looking for is support and resistance. This was the first thing I was looking at Alibaba this morning, is I was drawing a resistance here, which is pretty reasonable, pretty normal, and then a support level here. And my thought process was plain and simple. This is a resistance, this is a support. Now, if I go to the daily chart, you'll notice before the gap up happened, you had 1, 2, 3, 4, 5, 6 in a row. Granted, we were gapping up on a Monday. Also, we were already up on Alibaba approximately about 28% over the last 6 days. That's the most it's been up in like a year and a half. So my thought process is some bulls are going to be taking some profit, selling, and locking in those gains. So if we pop back over here to a 3-minute chart, very frequently I do wait for the very first 3rd-minute candle. But even if you do not, in this scenario, what you can do when you're fading is you want to sell something as high as possible. And the cool news is, in this situation, when you're playing a gap up fade, you can absolutely throw in a limit sell order on a nice high price to see if you get filled, but you're going to be right or wrong within the first 30 minutes. That is almost a guarantee. And for me, when I'm shorting out the gate, I want to put as high as an entry as possible and as high as a stop as possible. So if I had an entry here, the question is, why would I enter there pre-market? Answer number 1, really strong bull candle there. Answer number 2, that would be entering based on a 10 EMA. So bull candles closing below the 10. Answer number 3, that's kind of a neckline of a really little bit of a sloppy double top. And answer number 4, it allows me to have a $1.50 approximate stop loss with a stop really well above the pre-market high. So that if Baba throws in a nice gnarly bullish candle at open, I'm able to catch some of that open and hopefully write it down on the downside. Also note, right before market opens, you get a pretty decent big bear volume candle here. And this big bear volume is occurring at a support. So I do expect some quick buying to come in here. So this is one way to play it, right? Just have your limit sell, have your stop up here. In this situation, I would be playing $2 stop loss, put my stop up here, put my target at around 1.2, which is really right towards this pre-market low, and very first candle, boom, you get filled. Now, to be a real hero, you could have done a limit sell at the actual pre-market line that you drew in there. That would have been the coolest thing ever. Newsome, short at 113, stop at 115, allowing an even better risk-reward ratio, but alas, can't tell the future. Now, once this candle comes in, I say something very easy to myself when I'm looking for a fade. This candle, this volume, we need a close below that. If we close below that, we're closing below buying volume, we're closing below a huge bullish candle, and we are closing below this pre-market support. If that occurs, I'm going to continue to hold my short, I'm going to lower my stop and hope for the absolute best. Next candle, good grief. Amazing. Are you kidding me? We not only close with that candle, but we do it in a gargantuan fashion. This allows you to take your stop loss from -1 to about -0.7, building that holding muscle, because this is when you do it. The trades start working immediately, and you're going to take that target down. You're going to drop it a little bit lower to see if you can catch a little bit more on this particular trade. And the very next candle, like normal, you're going to get a retest, but you shouldn't be freaking out here. You should be okay. You should be patient. You'd be waiting. You've lowered your stop loss. You have your target. You can take this off and just let it ride. At this stage, you should probably walk away because the trade's working immediately. You've already lowered your stop. You already have a target, and you have everything that you could possibly want. If you lose on this candle, you would have to feel good about it. But your expectation is most likely at this stage that you're going to get something like this. Best case scenario. If you know that a retest is likely, walk away for 7 minutes, 10 minutes, 13 minutes. Walk away for a period of time, because this is how you will capture the larger gains. I know it's hard. I know you've heard me say it a million times, but it will help you. In this situation, we did retest that exact pre-market low. If you had not already entered the trade, this would be the spot, in my opinion, to short here, stop loss above here. If you were not already in, this is where you're going to get in. Agreed. It's scary. Agreed. All you're doing is basing it on two things. The fact that the daily chart had a big gap up, there was a lot of bulls that were going to sell, and all you're doing is shorting off of pre-market support, old support, new resistance. You have no idea if this trade is going to work. You're scared, mortified, petrified, and terrified. But as you're here, you're taking the trade, you're shorting it there, you're hoping it works, you're hoping. When this candle comes in, if you're around to watch it, you now take your stop loss from where it was and you lower it again, going from -0.7 to -0.5. So this way you're able to lose smaller, knowing that eventually your stop could go approximately right here, give or take, with that candle coming in. Next candle, again, best case scenario, next candle, you miss your trade by pennies. 4 bear candles in a row, missing your target by pennies. Give it the Newsom nudge, lower it down just a little bit, and boom, your target gets hit. And that is how you can fade a gap up move on almost any position ever. Is it always going to work? Of course not. But you're analyzing the daily chart, you're analyzing the pre-market support resistance, and you're going to do your absolute best to short off of really, really basic levels. Now, the cool part is this does turn into a really nice bull setup at some point, because again, it is a retest gap. I did not play the long trade, but this is what it would have looked like. Long trade, you have a strong bull candle. You got the bear candle here, indecision closing above the 10 EMA. That's a 10 EMA setup. You have a little bit of a double bottom kind of brewing looking thing. So entry here, stop below low of day, 110.02. We're going to do 108.02. So it's exactly $2 stop loss. And let's see if we get triggered in. Not yet. Oh, I love that pressure building. Woo, I love that candle. High is 110.01. I love it. Evening star reversal. This position should go lower. It definitely should not go higher. And if it does go higher, some bears are going to be trapped. Oh, good grief. It happens immediately. That's amazing. That's so good. If you're not in on this, you absolutely have to have a limit buy to get in on a pullback at that particular stage. Next candle, you get filled on that pullback. If you don't get filled on that pullback, you get filled on that pullback. If you don't get filled on that pullback, you get filled on that pullback. Once that bull candle comes in, amazing. You're increasing the stop from -1 to -0.7, building that holding muscle. And target 1 is going to be the old spot where you shorted earlier on the day. Bingo, bongo, right there. Peel off your position, sell some or sell all of it. If you're selling all of it here, you got 6 or 7 bull candles in a row. You're up approximately an R. You just made 1.4 on the previous trade, 2.4 on the day, all in the first hour and a half of market open, done for the day. Ladies and gentlemen, that is how you become a real-time, full-time, real-life trader. You are amazing. Post in the comment section below how you played Alibaba today, and let me know if you have any questions at all. You rock.